Hi, this is Matt McAleer, Director of Equity Strategies, with our 2-minute wrap-up for the week. Friday just after the close. Let's take a look at the global markets on the equity side. The phrase that comes to mind currently is embrace the grind. We're about halfway between the October lows and the post-election highs. The day-to-day has had some whip to it. You've had to try to look through there. If you've been watching our videos over the last 5 or 6 weeks, you know we came into October in decent position in the U.S. portfolio, had about 18% cash, put that to work throughout the month. Some of those prices look good, some of them don't. We've had nice moves in our healthcare area, in some of our broader index areas. Energy continues to trade like it's poisoned. It's going to take some more work to get a lift off there. More work than just the barrel going higher. International. I haven't had anything good to say about international since we started doing these videos 5 or 6 weeks ago. This is the first week I'm going to give international a little tip of the cap. Emerging markets, which led the global equity markets down hard starting last spring through the summer, actually had a decent week. They're trading right now about 5, 6, 7, in China's case, 9 or 10% above their October lows. That's the first positive we've seen on the international side. As you know, it's been a mantra here that we in the U.S. are going to have trouble rallying until international can put a little bit of a bid in. So we saw it in emerging markets, developed a little less so. Still need some work to do there. How about domestically? Early week, Monday, Tuesday, Wednesday, we made a real run towards that 2605, 2610 area. Demand did come in. What was most positive for us here in the trading room is we finally got some down opens. In weak markets, in markets that are having trouble getting going, up opens are your enemy. Those futures that are green when you take your first peek at them at 6 in the morning, always cause trouble in a tough market. Thursday we got a good hard down open, drove us down to where some demand was. So we discovered something there. On the down move there is demand. Friday, same thing. Futures down off of some weak tech numbers overnight, found demand. That's the first positive we've started to see in the U.S. market. We need to find where is demand. On the upside, I'd like to see a little more follow-through. We've gotten enough extreme ratios in some of our trading numbers we look at, high-low, weekly momentum, even from some of the sentiment factors showing some washed out levels of bulls, that I'd like to see a bigger lift. Even today on Friday, we started to get that mid-afternoon, early to mid-afternoon lift off of some news that Trump is going to be speaking to China in a more, let's call it, friendly manner. That bid, while it continued, wasn't really with the push we'd like to see to get very aggressive. So we'll see what happens next week. Everyone have a great weekend. Next week's always a tricky week with the shortened week. Half-day Friday for both the fixed income markets and the equity markets. We'll see what happens volume-wise, but we will be live from the trading room about 1:30 on Friday next week. Have a great weekend.